So welcome back to the channel. In this video, talking about $1 trillion, Mr. Evil Face. Plus, we've got an update on Voyager with the FDIC insured funds or not. Bit of a debate on that one. Also looking at SBF, a few updates here. Mt. GOX as well, Bitcoin funds potentially being released in August. So quite a lot of updates to get through here. But starting here with the $1 trillion. So the $1 trillion question, is this going to be a resistance for crypto's total market cap right now? So on screen, we have the total crypto market cap going back over time. And if we just look over the last few years here, let's pull it up to around 2021, if possible, and just have a little look at this. So as you can see, we broke the $1 trillion barrier back here. So this was in January of 2021. So just over a year and almost a year and a half ago now, we broke through that huge meteoric level of $1 trillion. And so we found ourselves teetering up nicely. We obviously had a huge pullback in May, 2.5 trillion almost hit, then all the way back down to around $1.3 trillion. And eventually we reached our apex at around just over $3 trillion in November of 2021 with the 69K all-time high being hit. And now we've started to really see this, shed a load of market cap over recent weeks and months. And after we just pull it to the 30-day chart here, we broke below $1 trillion for the total crypto market cap here around the 13th, 14th of June of 2022. Of course, the three arrows liquidations, all of these things cascading together, a huge, issues in the crypto space, and we did break below 1 trillion. So an area that I've seen a lot of high-level traders talk about was somewhere in the $700-800 billion for total crypto market cap for an area to really heavily DCA. So that's just one of the mental models I've been looking at, and we started to break down to around the low 900s here, but we haven't gone to 800, 700, etc. that many have predicted, which would probably indicate still a big nasty sell-off further, retest 17.5k potentially for BTC and alts to bleed out. But what we did have here was another rally towards the end of June, and we reached $1 trillion in market cap once again. So back to that nice round number. But as you can see, we were rejected from that and then came down subsequently, tested $900 billion, and thus have started to rally once more. So the 4th of July weekend was the 3-day period where Arthur Hayes was bear posting. A lot of people were super negative, and it was kind of the opposite sentiment in the market as to what we had back in November near the top, where everyone was bullish. All the signals were going great. We had the opposite of that. Everyone was bearish. People were shorting. People who didn't even know how to short probably a few months back started to short the market, and all this contagion around these lenders, etc. The market looked pretty damn unhealthy. But as we know, the market often does the opposite, or tries to create max pain for the most traders. People are going short. The market tends to want to revert back upwards, and we were expecting some mean reversion. So we've now started to eke our way back up again. BTC price has been doing fairly well over the last 24 hours, 22.5k almost hit on the CME. And we've now come up to $1 trillion yet again. So that magical number of 1 trillion is now a resistance point here. So the kind of idea I have here is that, you don't want to be FOMOing into making purchases now. We are in a bear market, and having just moved from $900 billion to 1 trillion, so a $100 billion move in the space of less than 1 week, I would suggest that there's quite a bit of froth has been seen in the market here, even though we're at really depressed prices. So if you look at the general state of cryptocurrencies here, we've had a nice rally over the last day or so, and then people who are late to the rally, those who are maybe going long or making spot purchases last night, maybe early this morning, etc., have probably got a bit of a bad feeling in the stomach right now, because we've started to see a bit of a pullback across the board, which we've run into a resistance for total market cap. And if we just check the BTC price as well, we've moved into a point of resistance. So this is the resistance of the 200 weekly. So this is the 200 weekly moving average, and that is the blue line denoted on the chart here. And we just ran straight up into this over the last 24 hours. So we come up and ticked it around 22, I think it's around 22,400 odd. We came, tapped it, and have rejected thus from it right now. Same exact picture with Ethereum as well. The blue line here coming in, dinging it, and then getting a bit of a pullback here. Funnily enough, with ETH, if we just pull this across, you can see that the previous all-time high from last cycle is the kind of confluent area we're around right now, $1,200 and some change here. So quite a few resistances for ETH, quite a few resistances for BTC here, and so a temporary pullback is probably on the cards. Whether or not we continue with another leg higher, there's quite a lot of price gaps in terms of we didn't trade much along the levels of 22,000 up to 28,000. Bitcoin literally just nuked through those levels, and typically it likes to spend time filling out the profiles within various price levels. So there is some bullish hopium on the cards here. But if you are not, positioned in the market for, a long right now, or you haven't made your spot purchases, maybe FOMOing in during a bear market isn't the best strategy. There are a lot of headwinds still to play. Now, Don Alt posted this earlier. Slow disbelief climb into 22K resistance, into a pop to 28K. A man can dream. So that is the ultimate goal of where this market could go in the most bullish case here. 22K resistance that we've just battled out here could be flipped into a support over the next, maybe day or two. And then we can really try to attack 28,000. So there are opportunities to go long on your favorite altcoins during this period in the market if you wish to do so, not financial advice, but you need to realize that these are most likely going to just be trades, short-term trades, and not maybe those long-term positions that you want to hold. As the macro environment is pretty damn bad. You're seeing political uncertainty, you're seeing riots, issues with global food shortages. Look at the Netherlands, look at the issues in Sri Lanka. All these different things are probably going to mean some very bad months ahead economically for many nations across the globe. So DCA machine will be fired up at some point, but I do not think it is now, and certainly not whilst FOMOing into random rallies. So that is the $1 trillion talk over and done with for now. We'll see if that acts as a resistance and whether we can flip that into support in the coming days or weeks. But now on to Voyager news. FDIC investigates Voyager's claims about customers' funds covered by deposit insurance. So Voyager had posted a statement and it said in the, I think it was the CEO's post, something along the lines of, dollars held within Voyager are FDIC insured, but this apparently is now incorrect. So there was a bit of a silver lining here for Voyager customers, but from this documentation attached to this report, which is here from the Metropolitan Commercial Bank, if we just scroll down a little bit, FDIC insurance coverage is available only to protect against the failure of Metropolitan Commercial Bank. FDIC insurance does not protect against the failure of Voyager, any act or omission of Voyager or its employees, or the loss in value of cryptocurrency or other assets. So this sounds like the FDIC insurance that Voyager was trying to big up here over the last couple of days is null and void, really. So that's a bit of a kick in the guts for those who are invested in Voyager and have funds over on there in the form of stablecoin assets. So I hate to be the bearer of bad news, but that is the current update for Voyager right now. In terms of that whole saga with Voyager, we know SBF, the Alameda team, they had a loan of almost $400 million outstanding to Voyager, whilst simultaneously offering a $500 million line of revolving credit. Crazy stuff. And in the first tweet from Alameda's profile, since they deleted everything during the bear market, may I add, there's no other tweets on here. They had obviously thousands of tweets probably going back a few years, deleted everything. Anyway, they just tweeted this out: happy to return the Voyager loan and get our collateral back whenever works for Voyager. So that's them kind of having a word back in regards to this whole situation and some of the chirpiness from CZ, etc. And in terms of what CZ said yesterday, when he said very interesting around those statements that were shown with Alameda owing a lot of money to Voyager and also posting a loan to them, He put very interesting under that, and then SBF has fired back towards CZ here. And as someone posted down here, just tagging CZ in for you, SBF said this: always happy for people to take an interest in helping the industry, less so if it's just pretending, but kind of wish some of them would bother asking their legal team how bankruptcy works first, or, reach out to ask for clarifications. I'm always happy to inform. So this is quite funny, and he's poking fun at CZ, but also this statement here, less so if it's just pretending. So CZ's been saying that they'll help out maybe some companies through mergers and acquisitions. SBF and FTX's team clearly doing a bit more in that regard, as they have made numerous offers on companies, and we've been a little bit quiet from Binance. So that is where that jab comes from there as well. So interesting to see the longest pockets in the crypto industry having a bit of to and fro here over on Twitter. So who needs soap operas when you've got crypto? 90% of the crypto deleveraging is already done, says Mike Novogratz of Galaxy Digital. He believes the recent liquidation cascades from 3AC and all the shitstorms around Celsius, BlockFi, Voyager, and others has seen most of the deleveraging leaving the crypto system right now. So he believes that we're 90% through that deleveraging, and so he's pretty much saying we are very much near a bottom here, and that 13K BTC price point will not be seen. Whether you believe him or not, I'll leave that one up to you. Then on to Mt. GOX. So Mt. GOX released an update on creditor rehabilitation plan. So they did release a statement back in November, and now they've actually officially said the exchange could begin to repay its creditors as soon as August, with some compensated directly in Bitcoin. So within the documentation, you can check it out. I'll leave a link to this all down below. But the document details various choices the creditors can make when receiving their payments. They may receive early lump sum payments and may receive a portion of their claims in the form of either Bitcoin, great, you want your Bitcoin back, or Bitcoin Cash. Who the heck wants to receive their refund or their redemption in Bitcoin Cash? Crazy stuff. This means a swell of Bitcoin could start to hit the market as Mt. GOX starts repaying its creditors next month. So another slightly grey cloud potentially, with people maybe getting some of their BTC back. And of course, back in this period, this is 2014, I believe, Bitcoin was trading somewhere around the $400 to $500 region. Of course, it's over $21,000 today. So you waited 7 years for Mt. GOX, and you're suddenly rich if you sell those Bitcoins right now. What do you do? That is a question for down below in the comments. What do you do? You've just had a 7-8 year wait for your Bitcoins. You just get them back next month. Are you hodling, as Kobe says down here, or are you selling those and taking those profits and running for the hills, considering the current economic climate? Let me know down below, folks. That is all for today's update. I will see you again tomorrow. Subscribe if you're new, and I will see you in the next one. Goodbye.